For decades, the global economy operated on a set of rules largely shaped in Washington. But a profound and quiet shift is underway, one that is redrawing the world's economic map. This change wasn't announced with a single dramatic event, but is being built piece by piece through railways, trade deals, and strategic partnerships. The recent meeting in Kuala Lumpur was a powerful symbol of this shift, where China brought together more than 20 nations from Southeast Asia and the Gulf. This wasn't just another diplomatic gathering, it was the foundation of a new economic platform. Collectively, these countries represent a staggering $25 trillion in GDP and a population of over 2 billion people. They are already responsible for more than half of the world's economic growth, meaning the momentum of the global economy is increasingly tied to their fortunes, not just those of the West. This emerging bloc is fundamentally different from previous alliances like BRICS, which were often hampered by internal divisions. What is being built now is not based on abstract ideals, but on concrete, physical ties. The evidence is visible on the ground. In the ASEAN Express cargo corridor linking Malaysia to China, in Indonesia's Jakarta-Bandung high-speed rail line that has carried millions, and in the expansion of ports like Kuantan in Malaysia, financed by China. These projects are more than symbols of cooperation. They are the hard infrastructure of a new integrated economic zone. They are anchors pulling these nations into a tightly woven network with China at the center, creating a self-sustaining system with its own supply lines and trade routes. While Washington remains preoccupied with internal political stalemates, Beijing is meticulously constructing a rival framework designed for the long term. This strategic pivot has been dramatically accelerated by the recent trade war with the United States. The U.S. imposed heavy tariffs, sometimes exceeding 30% on Chinese goods, leading to a significant 15% drop in Chinese exports to America. Yet this pressure has not crippled China as intended. Instead, it has revealed a masterfully prepared long game. China's overall trade surplus has actually swelled, approaching $1 trillion. How? Because the goods once sent to the U.S. have been rapidly redirected to dozens of other markets. Chinese electric vehicles are now dominating sales in Europe and Southeast Asia, while Chinese solar panels are flooding into Africa. This resilience stems from over a decade of strategic investment through the Belt and Road Initiative, which wove China into the economic lifelines of the developing world. The trade war didn't isolate China. It proved that the world's economic dependencies have already diversified beyond a Washington-centric model. The transformation extends far beyond goods and trade into the very foundations of financial and energy power. For decades, a cornerstone of American global influence was the petrodollar system, where oil was priced in USD. That foundation is now cracking. Nearly a third of Saudi Arabia's oil exports are now traded in currencies other than the dollar. And a landmark liquefied natural gas deal between China and the French energy giant Total Energies was settled in Chinese yuan. This signals a clear loss of confidence in the dollar's absolute dominance. Furthermore, China has positioned itself as the undisputed leader in the energy of the future, controlling roughly 80% of global solar panel production and dominating the supply chains for wind turbines and electric vehicle batteries. Whether the future is powered by fossil fuels or renewables, Beijing holds a commanding position. The meeting in Kuala Lumpur was therefore a signal of a much deeper realignment. It revealed that the nations of the Global South are no longer willing to be passive actors in a system designed by others. They are beginning to coordinate not just their economies but their political stances as well. What we are witnessing is the early, tangible formation of a parallel global system, one with its own infrastructure, trade agreements, and financial channels. For the United States, this is more than a simple loss of market share. It is the erosion of the strategic framework that underpinned its dominance for generations. This is a structural change that will define the remainder of this century. The balance of power is moving, and the real question is no longer if this new system will rise, but how many more nations will be drawn into its orbit in the decades to come.